I wanted to talk about house hacking today because things are starting to look interesting now that prices are coming down and rents are on the rise. In case you don't know, house hacking is a fancy term for buying a house, living in part of it, and renting the rest of it out to help you pay for expenses and your mortgage. So I'll try to clear things up and we'll take a closer look at what house hacking numbers look like in Toronto these days. But before I move on, if you like content like this, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. In an ideal situation, the best house hacks allow you to live for free because your tenants basically pay for all of your bills and your mortgage payments. But home prices in Toronto have been going up much faster than rents in the past few years. So even though you're probably still going to be cash flowing negative with house hacking these days, the amount will be a lot less compared to if you were renting, and you're actually gaining equity with the amount you put in each month instead of just going down the drain. Let's take a look at some numbers. Instead of paying $1,600 per month to rent a basement apartment, you might be able to live in the same unit for a lot less if you bought a house for around $1 million these days. If you put a 20% down payment at our current 5-year fixed rate of 5.25%, then you can collect over $4,600 in rents from 2 upper units, which helps pay for your operating expenses on your house and your mortgage, and you'd only be out $600 per month instead of $1,600. And remember that $4,400 per month that you're paying to the bank each month, a big chunk is actually principal pay down, so that's yours to keep at the end. And so you are in a much better position compared to renting even before we take into account appreciation. House hacking sounds great, but of course the biggest hurdle would be being able to actually buy one in the first place. House prices in Toronto have dropped 20% from the peak, but prices are still high. A $1 million house means you need around $235,000 of capital with a 20% down payment plus closing costs. And it might even be even more if you need to renovate the place before you move in. The second big hurdle is being able to qualify for an $800,000 mortgage. And that means you'll need to have a 6-digit family income in order to qualify. Now, if you can make it past the 2 financial hurdles, let's take a deeper look to see how things compare now versus before. The numbers these days actually move towards your favor. Rents are coming up and prices are coming down. But a more accurate way to compare now versus before isn't to look at absolute rents because prices have also changed, but rather rent yields. And you can see that rent yields have gotten 63% better. Now I know what you're thinking. Interest rates have also gone up. But even though variable rates aren't at 1.75% anymore, at our current 5-year fixed rates close to 5.25%, cash flows are actually still better. I think the big thing that can make a lot of sense these days is if you have the cash so that you can take full advantage of the big price drops and the rising rent yields more effectively, at least in the short term. Just look at this. If you have $330,000 of cash now, you can put down a 30% down payment and you end up with break-even cash flows, which means you can really live for free by house hacking. As a comparison, $330,000 was just a 24% down payment last year, and it was a negative cash flow position if you did the same thing before. I haven't talked much about market appreciation in this video because I assume that things will average out and you'll probably see similar rates of average appreciation in the long run. But keep in mind, this is a huge part of why real estate makes sense. At an average appreciation rate of 7% per year, which is what we've been seeing in Toronto for the past 50 years, that can bring in $70,000 per year on average from appreciation for a $1 million house. So that's just something else to keep in mind to sweeten your decision. And perhaps to wrap things up, just remember that a good deal compared to the average market will always be a good deal, whereas interest rates are cyclical and higher interest rates won't last forever. What this means is that buying right now means that you can take advantage of the lower purchase prices and better rent yields, and you can always refinance when interest rates get better. So if you are interested in learning more about house hacking in Toronto, let's chat. We can take a look at your budget and requirements and then show you what might be possible in our current market and what it takes to get there. Once you're ready, our sales team will help you buy it, offer renovations guidance, and help you with leasing and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.